I'll be damned. Look at that. It is time for an intraday update on this market as well as with AMC stock. And AMC breaking above the key resistance level of $4.50 per share with a pretty strong move higher. Now, we're going to get into exactly what this implies could come over the next couple of days and weeks with AMC, but more specifically the next couple of days, because we're going to have some very important events and data that can and will move AMC as well as the broad market. So we're going to get into that as well as what is driving this market here today, and there is a lot on that front as well. So we're going to get into it. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comments section. And if you guys want to come trade with me live in real time, link down below in the description of this video. So we'll talk about AMC here in just a second. As you guys know, I kind of like to get into the broad market stuff before we dive into AMC, because what's happening in the broad markets does affect AMC. It does affect the companies that you invest in, regardless of really what's going on with those companies on a day-to-day basis. Example, if the markets are crashing, most of your portfolios are probably going to be in deep red as well. That's why this stuff is kind of very important. Now, what's happening today? What's really causing this move today? And if we take a look at what is actually happening here in the markets, the S&P 500 is currently down about 0.16%. You were down a lot more than that, obviously hit the low of 394.55. A couple really red candles, but ever since this really Senate banking committee has started, and I'm actually looking at this right now, I'm not going to pull it up because YouTube will not push this video out to you guys, but it's pretty much the head leaders of like the FDIC vice chair, or not vice chair, but Fed Bar is there. I believe the vice chair of the FDIC as well is also there. So they're trying to pretty much come together and see if there's common ground they can agree on to get something passed so another banking crisis does not happen, or this current one does not get worse. And I think the markets do like that. Not necessarily investors, because the damage is really already done in the grand scope of things, but I think that algorithms are hearing reforms and laws and changes, and they're really starting to bid up the markets here since this hearing has started. So that's a big part of today. Now, information technology, and that's where I want to start. Information technology is down about 1% today. If you guys take a look, I can actually do this for you guys. Make it so you can actually see and make it a little bit bigger here. This is information technology. Look how big of piece of the pie information technology is. That is going to be your Facebooks, your Apples, your Amazons, your Googles, right? This is your large tech, worth $8.66 trillion. Down about 1% on the day, whereas you do have a lot of other sectors that are in the green today. Industrials are up 0.58%, consumer staples up 0.60%, utilities up 1%, energy up 1.35%. This is very indicative of kind of that recession trade, and with that recession trade, you're seeing technology finally taking the brunt of the beating. And this is something that really could cause the indexes a lot more fear from here and get you into a more or less capitulation kind of environment, because if people are expecting the recession to start really Q3, Q4 of 2023, markets usually bottom 3 to 6 months before a recession actually starts. So that would be really from now over the next 3 months or so. And that does mean that any time now potentially could set you up for that downside flush, get close to, if not break under, those lows that we've seen in 2023. So that's what is happening here today with the overall sectors, right? Technology, your Apples, your Metas, your Googles, your Amazons are down quite a bit. Apple is down almost 1%. That's a pretty big move on Apple. Apple was down like 1.5%. Meta currently down about 1.5%, down almost 3% at the lows today, and the trading day really isn't even halfway through. So a lot can change here, but this is what we're seeing as of right now. A couple other things that are really happening under the surface. Goldman Sachs raised its expectation of a U.S. recession in the next 12 months to 35% from 25%, but it still doesn't expect a slump large enough to prompt aggressive Fed rate cuts. BlackRock also doesn't see rate cuts this year, with strategists from the world's biggest money manager saying, quote, "We see a new, more nuanced phase of curbing inflation ahead. Less fighting, but still no rate cuts." And that's a huge story of today. The markets went from pricing in like one rate cut, maybe it was very back and forth depending on volatility and news just a month or two ago, right? Now you were expecting 4 rate cuts. Markets are starting to unprice that a little bit. You're still pricing almost 4 rate cuts by the end of this year, but you're getting closer to 3 rate cuts, and then eventually you'll probably get closer to 2 rate cuts. Then you might go down to 1 rate cut again, and that's where you can get this downside in the markets, because a lot of people have flooded into technology to you know, to be in technology when the rate cuts do come. Now, question is, why are they cutting rates? Are they cutting rates because inflation is coming down naturally, or are they cutting rates because you're in a recession? Big difference there. And that is part of the story today. You guys can see this in the bond yields. The 10-year treasury is now at 3.55%, up 2 basis points today after hitting that low at 3.28%. You've went up about 25 basis points, and compared to where we were about 4% early March, so almost 1 month ago, there's still quite a bit of room here for the yields to actually rally. So I will be watching this closely, and this will directly affect technology specifically. So and that does affect AMC, but the last couple of days, technology has been going down, like your Apples, your Facebooks, right, your Googles, your Amazons. AMC has actually been doing very, very well, and I think that is something to take note of, because like we talked about in yesterday's video, a lot of collateral that is really put up for these short positions on AMC is high value collateral, is high quality, I should say, like your Apples, like those companies that I just mentioned. And when they start to take a hit and you need more collateral for your AMC short position, because you are in a very uncertain time, specifically with AMC. We don't know what's going to happen coming April 27th, and that leads a lot of essentially fear, uncertainty, and doubt for the short sellers. If things don't go their way, their collateral is getting whacked, and then AMC does rally, that is very much a recipe for a short squeeze, and I want you guys to be fully aware of that. And I'll probably make another video today on this and just solely go over this concept, because I do think it has big implications if we see, and I want to emphasize that, if we continue to see technology go down and AMC go higher. And that is what we have seen over the past 2 days now, and AMC just overall has been outperforming the same stocks that are used as collateral to back AMC. So hopefully that makes some sense. Like I said, we'll make another video elaborating on all of that here today as well. Now, as far as the Ortex data, guys, you are seeing cost to borrow rates spiking up higher again. This is telling you that the volatility is here to stay, and you can expect this stock is probably going to make a move higher here pretty soon. The live short interest of free flow is sitting at 25%. The 129 million shares that are currently sold short, with a cost to borrow average of 382.5%, cost to borrow max of 435.12%, and cost to borrow minimum was sitting at about 328%. So your cost to borrow max has went up from about 398% yesterday to 435% today. Cost to borrow average staying about the same. But what I really want to highlight is Interactive Brokers had us really at 217% cost to borrow rates here today. Yesterday was 214%, and now you're at 251%. So you're seeing almost a 35% increase in the cost to borrow rates here today alone. Just any old stock that has a 35% cost to borrow rate is pretty high. Look at something like GME, 30% cost to borrow rates. You're seeing a 30% increase to the cost to borrow rates here today. So I do think this is a very big deal, and I would not overlook it. Something that also might be giving AMC a little bit more stability here if shorts are taking a smart route here and actually hedging out their positions. And maybe that is the case. If you take a look at the option activity, it's a little better today, honestly. 4 orders totaling $822,000 with a positive order value of 52%. Take a look at this order that is coming through just here in the last couple of minutes or so. A September 15th, $8 call, 6,500 options that were bought. That's a lot. For $65 a piece, worth $425,000. I actually think this trade is very interesting here and might make a lot of sense given the time that is on this contract and the relative cheapness of this. I think between now and April 27th, there's a very good chance that AMC has a very positive day based off of this court litigation, any news that does come out on this. So I do think that is a very interesting option, and we will look at some of these here in the trading community as well today. Like I said, if you guys want access to all of that information to stay up to date with all the moves that I am making in the markets, link down below in the description of this video, guys. So there is that information. If we do take a look at what the markets are pricing in as far as the Fed, currently you're now back to a pause. 51.4% of investors still expecting a pause, but the probability of a 25 basis point rate hike May 3rd is also going higher here today. Yesterday, it was sitting at 40% chance of a rate hike May 3rd. Now you're sitting at 48.6%. So markets are slowly starting to price in another Fed rate hike and slowly starting to price in less Fed rate cuts by the end of this year, guys. So I think that is a very interesting story. As well as that, today you did get Walgreens that did report better profits than expectations, but at the same time it wasn't too pretty. You're seeing a lot of weakening demand for especially COVID type products, whereas that is somewhere that Walgreens really shine. But overall, not too bad. And here today in after hours, you are going to get Lululemon. I don't know if I think it's Lululemon, but when you look at the word, it doesn't really look like it's pronounced that way. You got Micron, as well as Dave & Buster's and Jeffries that report here in after hours as well. Some things to pay attention to, especially Jeffries, because they are more so an investment bank. That will be interesting to see what they have to say, guys. So there is that information. That is really it for today. That is all for this intraday update. If you take a quick look at the technical picture on AMC, we'll break this down more by the end of the day. I just want to make sure AMC stays above these key levels before we talk about it and get excited about it. AMC has struggled 5 days in a row, really from March 14th all the way until just what we seen yesterday, March 27th. AMC could not break out and hold a close above $4.50 per share. You did that for the first time yesterday. You're continuing on that here today, up 2.20%, sitting at $4.65 per share. And all things considered, considering the markets are expecting this dilution to come, this reverse stock split, and AMC to authorize more shares, given all of that short-term negativity that could come to AMC share price, the fact that AMC is actually rallying off the lows that we've seen, it's slow and steady, but there's definitely an upward trajectory here, is a very, very positive sign. And after all, every time AMC has raised capital in the past, the stock has went bonkers. So dangerous short to be involved in here, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.